Are you planning to give to a charity this year? Before you do, there's a tax update that you may not be aware of. Beginning January 1st, 2026, not all charitable deductions will be deductible. And some that were not deductible in 2025 will be deductible in 2026. Under the One Big Beautiful Bill, the rules are changing. These changes could affect your taxable income and how you plan your year-end donations. Hi, I'm Elizabeth, a tax manager at a large CPA firm. This information I'm about to share is for informational purposes only. No CPA-client relationship is created by this. Currently, charitable donations are reported on Schedule A as an itemized deduction. For those that qualify for the standard deduction, you do not receive any tax benefit by giving to your favorite charity. This will change beginning January 1st, 2026. Single filing taxpayers will be allowed a $1,000 above-the-line deduction, and joint filing taxpayers a $2,000 above-the-line deduction for cash gifts to qualified public charities. This does not include non-cash gifts like clothes donated to the Goodwill or the Salvation Army. Non-cash gifts will still be reported on Schedule A with no tax benefit for those that use the standard deduction. This is still good news. Standard deduction filers will now get a benefit for cash donations to their qualified organization in addition to the standard deduction. So for those individuals that use the standard deduction and donate at the end of the year, it may be more beneficial to wait until January 1st, 2026 to make that charitable contribution to take advantage of this tax law change. Now, the same good news is not for those taxpayers who itemize their deductions. Under the new bill, beginning January 1st, 2026, there will be a new 0.5% AGI floor for charitable deductions before you receive a benefit. What this means is the first 0.5% of your adjusted gross income will not receive a deduction. For example, if your adjusted gross income is $100,000, the first $500 donated to a charity is not deductible. The donated amount over $500 becomes deductible up to a ceiling or maximum amount of your AGI, depending on what type of gift you gave. If you donated cash, the ceiling is 60% of your AGI. The bill did make this a permanent percentage. For non-cash donations like to the Goodwill or Salvation Army, there's a 50% cap of your AGI. And for capital gain property or stock donations, the ceiling is 30% of your AGI. Now, in addition to this 0.5% floor being non-deductible, high-income earners will have an additional cap. For taxpayers in the 37% federal tax bracket, under the One Big Beautiful Bill, their itemized deductions are capped at 35%. This ceiling applies to all itemized deductions and not just their charitable donations. What does this look like for a high-income taxpayer? Well, let's suppose your AGI is $1 million and you donate $150,000 to charity. In 2025, your donation would go onto Schedule A for the full $150,000 deduction, and you'd receive a tax benefit of $55,500, or 37% of the $150,000 you donated to charity. Now, in 2026, that same $150,000 donated to charity will only be worth $50,750 of a tax benefit. That is nearly $5,000 less than 2025. When you take into consideration the 0.5% floor and 35% cap. So the bottom line is, if you itemize your deductions, it may be more beneficial to donate by the end of this year. But if you take the standard deduction, you may want to wait until January 1st, 2026 to make that charitable donation. As always, consult a tax professional for advice specific to your situation. I hope this information helps as you plan your year-end donations.